Hey guys, welcome back to the channel. Today I'm going to be providing a longer term market analysis on XDC and going over some extremely important support and resistance levels to watch out for. So if you enjoy the content, please do consider leaving a like and subscribing. So first, I really want to talk about this major area of resistance ranging from about 4 to 4.5 cents. Now, this is going to be a very key area of resistance for a number of reasons. First, it corresponds to this downward sloping red moving average, which is the 20-week SMA. Now, this is going to be also important because it's a horizontal level of support and resistance. We saw this level back in March of 2021 being a key rejection point, and then we came back above this, flipped it into support in May, bounced off into new all-time highs. And then you can see this was a key bounce point back in February, and then we rejected off the 20-week, coming back down, and we haven't really had a retest of this level since May of this year. So to me, this is going to be a very key rejection point if we're starting to continue this bounce back up into that level. Now, the 20-week simple moving average is very important because historically in an uptrend, we can see it holds strong support. So back here in May of 2021, we had a pretty significant bounce off the 20-week simple moving average. And then you can see we came back down and bounced off of it yet again. And then we had this last bounce here in September. Okay, so this last bounce was a little bit short-lived. We came and formed this macro lower high, and then we came back below this and then flipped it into resistance. So this is a very key point here, how we flipped it into resistance, we rejected off of it, and then we continued to form lower lows. And then a similar thing here happened back in April. We rejected off this moving average, came back down, formed lower lows, took out the support. So if we're starting to come back up and we're continuing the trend, what that would look like is just coming back up into this level, rejecting yet again, coming back down, and then taking out the support level, forming lower lows. So that would be a trend continuation. Now, obviously that doesn't have to happen, but to me, I think that's the most likely scenario if we're getting back up to this region, because we have the horizontal level of support and resistance that was essentially a key point for 63 weeks, and we have the downward sloping moving average. So really, it's just this level of confluence between two major levels of resistance. And to me, I don't expect that to be reclaimed on the first attempt, given how significant that is. Now, obviously, I could be wrong on that, and I would be wrong if we're getting back above and, say, closing the weekly prices around 5 cents. So that's kind of where I'm wrong on that idea, where I would expect a rejection off this point. You can also see that we have this key level right around where we're at today. If I just take this general retracement from the bottom of the range of the prior cycle's all-time high to the top, which is around the rejection point in March of 2021, you can see the middle is right around this level, around 2.9 cents. Okay, so this is important because it's the middle of this range we're in, and it's also correspondent to the March 2021 pivot, where after this rejection, we came back down, turned around off this level, and then formed a new all-time high. Okay, so that's kind of the mid-range of this level, also confluence with the prior price action in March. So to me, the number one thing that we have to do in the short term is actually definitively reclaim this. You can see we're just kind of consolidating here. This isn't very convincing. What I want to see is getting above it and then continuing to close above it, and then we can start targeting this 20-week simple moving average, which, by the way, is continuously going to move down. Since 20 weeks ago, we were closing prices around this level, around 6 cents. So this is going to average down, and that's going to be coming back down as our resistance. So overall, those are the key points that you got to look out for as resistance. But if we're starting to make our way back down before even retesting those, then the next logical level of support for me is around the 1.9 cent mark. Now, this corresponds to the prior cycle's all-time high, which is a very significant level. It's similar to how $20,000 is important for Bitcoin because that was its 2017 all-time high, and we're actually seeing that bounce off the 20k level, taking us up to around 24k. So in the short term, that is acting as a support level. So for XDC, if we're coming back down to this level on, say, yet another rejection or a rejection off the middle of the range, then this is the next logical level of support to watch out for. And in that extreme case that I want to talk about, not obviously likely for me, but if this is actually going to be lost, then the next level down from there would be all the way around 1 cent. So I don't think this is my primary view. I don't expect us to lose this level around 1.9 cents, the prior cycle's all-time high. But just in case, if that happens, then the next logical level of support is going to be this level around 1 cent. You can see that was the resistance we had back in August of 2020 and November. Okay, and then when we broke above it, it was basically straight up. We had these two solid weekly candles taking us up around 150%. So those are the key levels I'm watching out for XDC. I hope you guys did enjoy the content. By the way, if you want to check out the sponsor for this channel, you can head over to ftx.us. This is where I buy, sell, and trade cryptocurrency. And if you use my referral code SNOWYCRYPTO, I'll leave a link to that in the description below. Then you can get a 5% discount on your trading fees. So I definitely recommend checking them out. So thanks to FTX for being our partners, and thanks to you guys for sticking around and supporting the channel. So as always, I hope you guys did enjoy, and I will see you in the next one.